This bot on Pump Fund made $37 million in profit in a single month. Now, you as a trader have a strategy, but the trading bot has a code. You read the news, watch the charts, and feel the market turn, and you have a gut feeling. The bot does not feel anything. It just trades all day, every day, based on numbers and data. So who actually performs better in the long run? I'm Brett at CryptoGX, and in this video, I'll break down the real data behind crypto trading bots versus manual trading. Then I'll go into where each one wins or fails and which approach gives better long-term results based on real market behavior. So crypto trading bots, they are software programs that just follow rules. They're going to look at prices, indicators, and volume, and then make trades automatically, generating potentially consistent profits. Now, this is solely if the strategy is good. Now, manually trading, on the other hand, is when you decide everything yourself, when you buy, when you sell, and how much to risk. Both of these have their pros and cons, and in this video, I'll compare them side by side, test both on multiple benchmarks, and help you decide what works best for you. So let's go into the head-to-head. Round one, speed and discipline. Bots are miles ahead at speed and discipline, and it's for a good reason. Bots don't sleep, they don't take breaks, they don't miss entries or get emotional when the market moves fast. Once you set the rules, they follow them exactly every single time. Now, this alone gives them a major advantage, especially in a market like crypto that runs 24 hours a day. Now, for example, let's say the price drops on a particular coin very sharply at 3 a.m. as some negative news like tariffs shakes the market up. As you can see from this article right here, a bot is going to react immediately if your conditions are met. It's not going to hesitate. It will either enter or exit the trade as you have programmed it. A human might not even notice until they wake up in the morning, and then by then the opportunity's gone. With that in mind, bots are also faster. They don't just look at one single chart. Some bots can monitor hundreds of pairs of coins and assets across multiple exchanges all at once. Then they can react to those changes in milliseconds. This is basically impossible for manual traders, and in short-term trading, that speed can make a huge difference. Now, next, a huge strength is emotional control. Bots do not panic. They don't get greedy. They don't chase green candles or hold on to losing coins, hoping that they're gonna bounce back. Remember Trump coin? Investors and manual traders followed the hype, and lots of interesting things happened during that time. If we take a look at this chart, you can see that although the price went up to $77, it dropped back to about $7 within days. The liquidations, aka the people that their entire balance or portfolio was gone, hit over $1 billion. And obviously with this, investors who bought at the top encountered really heavy losses. This is the cost that manual traders pay due to their emotional decision making. Now, the bots, on the other hand, they follow logic rather than fear or hope, and that helps them avoid many common mistakes that humans make. So even simple bots, like those based on moving averages or RSI, can help avoid poor decision making by taking their emotions out of the process. So no FUDs, no FOMO, none of that. And I've got a video on FUD and FOMO, so check that out on the channel as well. The next positive point about bots is that they are consistent. If a setup is working very well over time, or if strategy is setting up well over time, a bot can repeat it without missing a beat. That kind of consistency is hard for a person to match, especially during long trading hours or really high pressure situations. Bots definitely win in this category. Now, that's a lot of positive talk about bots. This doesn't mean that bots are always profitable. Let's start in the kind of second area here: intuition, flexibility, and context awareness. So let's talk about what human traders can do that bots just can't. Now, imagine trading Solana when FTX collapsed. Without knowing what's happening in the outside world, that would probably be a disaster. Bots are going to follow code. If the conditions match, they will place a trade, but they don't understand why a coin is either pumping or dumping. They don't read breakout news or notice a shift in public sentiment. They don't know if a project just got hacked, if a new regulation was announced, or if a major influencer just backed a particular token. Now, humans do. Humans can be paying attention to this stuff, at least at the moment. So let's take an example. Imagine the SEC suddenly files a case against a major exchange. As we can see, when this happened against Binance in 2023, BNB coin dropped massively due to this FUD. Most bots are going to keep trading as usual unless the price triggers a stop, and a human trader can quickly understand the impact. They can exit early, avoid damage, or even short the right tokens. This is something that no rule-based system can do without someone updating the logic behind it in real time. And then if that's allowed, it could be an even bigger security risk. Now, humans also have one big advantage in low liquidity or narrative-driven markets like meme coins. During meme coin rallies, bots might ignore them because they don't meet technical entry rules, but human traders can spot social trends, they can read the room, and they can ride the wave early on. Now, this is not guesswork, and it's not just coded data. It's context that, a human is interpreting. Then on top of that, there is adaptability. A human can notice that a strategy has stopped working. They can step back, they can reflect, and they can change their approach. Bots are really only going to do what they're told. If a strategy starts losing, the bot will just keep losing until someone reprograms them, and then by the time a user might realize this, they might have lost hundreds of thousands of dollars already. As you can see here with this trader right here losing in a particular attack, which is just a scenario where something quickly happens that the bot could not realize what was going on. Of course, human traders also have weaknesses. They get tired, they get distracted, they hesitate, but in terms of pure awareness and adaptability, they still have the upper hand. So in unpredictable conditions, when quick thinking matters or when news breaks faster than code updates, human traders still lead the way. So based on these particular characteristics or skills, manual traders definitely win this particular round. But now, what if we're talking about long-term returns? Let's decide this in the kind of next section here, which is the performance over time. So what really matters when it comes to trading? For me, it's the results that I'm getting over time. You've probably seen certain trading bots claiming 82% accuracy and a 6.5 to 1 risk to reward ratio. As you can see right here on quantum copy trading, 6.5 risk ratio, 82% win rate. They're claiming a lot here. Also on Bitsgap, you can see that bots have generated over $16 million in profits in just 3 months. Now, obviously this sounds impressive, but here's the issue. Short-term statistics can be very misleading, and they do that on purpose because they want you to purchase their services. A bot might perform well for a few weeks or months, especially in very trending markets, but that does not guarantee long-term success. Markets change. What works well in one market condition often fails in another. For example, a bot designed for volatile moves might do well during bull runs, but then lose money when the market goes sideways. Some bots keep trading even when conditions no longer fit the strategy. They don't stop and rethink like a human would. And here's something that many beginners don't know. In some periods, even a simple buy and hold approach has outperformed active bots, and that's actually kind of proven most of the time, really. For example, when you look at the 2020 to 2021 bull cycle, holding Ethereum or Bitcoin for a full year gave better results than trying to trade every single move. Bots often miss the full upside by entering and exiting too often. So when it comes to lasting performance, bots can work, but only under the right setup. They're not magic solutions. They kind of require testing, regular updates, and a clear understanding of what kind of market they're built for. So there's no clear winner, and it solely depends on what your preferences are. If you want to buy the meme coins, look for 3x to 5x gains per trade, bots probably aren't really going to help you. However, if you want to get steady gains in a stable market condition, bots often perform better than manual trading. But the main thing that I would say here is, why not just get the benefits of both worlds? I think that the best approach here is a hybrid strategy. The best approach to trade and maximize your gains is probably using a mix. Use a bot to handle the basics, entries, exits, and risk control. Let it run your plan without emotion, but then at the same time, stay involved. Watch the market, follow news, and update your strategy when things start to shift and when your strategy stops working. This is not a sponsorship, but trading bots like Growlonics let you customize strategy and optimize your profits using AI. This way you get the speed and discipline of a bot, along with the context and insight only a human can really add. It's not about choosing a side, it's about combining both to build a system that works for you and not against you. And absolutely, I will say with this as well, you are going to create a hybrid system of bot and manual trading. So you're watching your bot almost as if you're manually trading. You're going to remove the emotional side because it's going to be performing the trades for you, and that's great. But you should also make a hybrid of your overall portfolio by having some things be trading, some things be buy and hold, and lots of dollar cost averaging whenever you can, weekly, monthly, whatever it is. Just keep putting stuff in to hold for a long time, and evening out all of those strategies is going to diversify you, as well as you should diversify in different assets, and overall you're going to even out to have the best return. So now if you're ready to get some crypto to trade with and maybe let a bot have some control over, I put links in the description for Coinbase and crypto.com where you'll get $50 at least in crypto just for signing up with those links. And if you want to get into meme coins, I also left a link to MoonShot where you can claim some free meme coins when you sign up. So if you learned something new or just enjoyed the video, make sure to hit that like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.